Welcome back to this live session for Wednesday's first session of the trading day. And before we begin looking at the calendar, welcome back everyone. Let's begin at the trading days here. Progressing through the volatile moment of the week, and coming today is Wednesday and tomorrow coming up as well. Quite a few big news on the market that's gonna be pretty important for this week here. So let's look at on the market here at the moment. Before we look at any instrument, we will be looking at first of all here gold, trading gold here with potentially higher probability entry. We have seen there was a breakup structure on gold in the past, and this breakup structure has given significant momentum in the market from this key support level. So looking at the market now from the trend perspective, this is currently bull market, and we have seen that previously we open position in that area. You guys have seen yesterday as well, which has given some move here earlier. Starting with daily chart, first of all, here's the very important price action that you can see on the daily time frame. After the previous daily bullish doji, today's market so far, once open, we can see the price has made initial bounce back to the upside in that area. So this is currently bullish that we can see in that market, and in that bull market the price action so far showing up to be potentially creating a new higher high in that market. That being said, guys, let's begin another trading days. And before I progress further, make sure you like this stream and also subscribe to the channel. If you haven't done yet, press the notification bell so that you are not missing any of the content that I'm posting every single day. Starting the day with possible entry opportunity here in this market. The previous daily candlestick pattern as well as the price action that you have seen in our previous session, the market is playing out to be exactly as expected. In the price is moving currently in the major direction of the trend. And as of with the daily market, this is looking at the bigger picture. Always whenever looking at the market, looking at bigger picture is the best way to trade the market, guys. If you look at here, you can see this is the daily trend in the market, right? Always looking at the bird's eye view. Right? Bird's eye view means that zoom out of the chart, look at the whole picture, see that how the market trend is evolving over time, and from that area the market is now creating that momentum for possible new trending direction here in that market. So if you look at this market, you can see that this is the support level from the if you look at here, you can see this is there is support here, bounce back, drop to that. This is FOMC move that you can see the past. If you look at this is an FOMC move, right? Every move there's a pattern here that you can look at. Why it is so important that we look at this level here. You can see that I haven't drawn any other level anywhere before. This is a very important level. How do you identify that level? That will give you a huge edge in your entry. Guys, this is where the key here. You need to look for the entry area. So how do you identify the major entry in the market? So if you look at here, this is support, and here is the double bottom formation on the market. And with this double bottom, if you look at the market from this here, bounce back to the upside, drop to that support, and again the price is moving in that direction where the market trend is up. So with this double bottom here, why it is so important that this double bottom is because if you look at the daily candlestick pattern formation, you can see that from those level there was a liquidity sweep in the past, and that liquidity sweep that you can see here, okay, the market crossed that daily low, and with the cross of this daily low, the price action has created its momentum back to the upside, followed by this pullback. The price tested this 10 EMA from the daily and then created a new uptrending market structure. And this is the beginning of a bigger move, because this is where the biggest volume came in the market, when the prices moved that trending direction here in this market. So currently what we can see, that this is the current daily price action, where daily support, and in that daily support, okay, so if we look at this is the current daily support level here in that market, and the previous daily candlestick pattern, we can see there is a long wick at the top, and because there is a long wick at the top here where the market is showing up to be bullish, starting from here, this is the bullish trending move back to the upside here in that market, which is showing that the market structure is significantly upside here in that market on the daily time frame. So what we can see, that with the market open early in this today's price, the price has created an initial bounce back to the upside. In the first two sessions, Sydney session and Tokyo session, we see the market has shown significant bullish momentum. That means that it is potentially remaining upside here throughout the day. So any pullback here is for us an opportunity to go long here. So ready for an entry. We found the directional buy. This is what I always talk about, guys. The first thing is to look for the trend. Welcome, good morning, welcome, and I hope that you guys can hear me. Say yes in the live chat if you can hear me. Now today's low here, that you can see the first line that we have drawn and the second line, and this is the today's low. This is significantly bullish trend that you can see in this market, and we have seen there was an order block formation. There was a breakup structure from the lower time frame, form a double bottom, and with this double bottom formation on gold has made its move back to the upside, followed by this narrow pullback, and you can see another move followed by this pullback here in that market, which is showing up that gold is currently significantly bullish, creating series of higher low. This is where there is a 1 hour liquidity sweep. This dodge is quite important. This is what I always talk about, that looking at the trend indicator. If you guys look at, if you have this indicator access, then you can turn it on and then see how the market has moved from that level. And this is, if you look at the previous candlestick pattern, this is where the market crossed the previous session's low and created this move back to the upside. So potentially the market could remain upside here further. Now we are narrowing down to the lower time frame that this market here it's still maintaining this uptrending market structure. So we are looking at here now the trend. So all the trade that you open, every trade that you open, every single trade, the first thing that we look at is the trend. We will be looking at the direction of the trend. That's the key, right? So you always look at the direction of the trend. When you see the market trend is bullish, we only look to buy this market. That being said, looking at the lower time frame, look at the 15-minute chart here, that you can see the market is maintaining this uptrending market structure. If you look at here, you can see that this is the current trend, and this is what I'm looking at the moment for a breakout structure. This is so important to know. See, you can see that how we are moving towards a potential entry opportunity. This is a very key trend here that you can see in this market, where there is a double bottom, a breakout. So this is an order block, which is the daily support, and the market so far has shown that significant bullish trend confirmation here in that market. So 15-minute trend line that you can see, this is the current 15-minute trend line, and we will be waiting for this breakup trend line. And once the market managed to break up trend line, we see that a couple of swing low. This is one swing low here, there's another swing low here, there's another swing low here. So we are waiting for the market to break from this trend line, cracking that below to this swing low for us to give us an entry in this market, right? So going back to the lower time frame, looking at the 5-minute chart, where also the market structure is significantly bullish, that we can see the price is maintaining this trend line. I'm looking at the now 5-minute chart, and any break from this structure, that means breaking from that trend line with a stronger momentum, with a bigger candlestick pattern formation, is where we are looking for an entry in this market. So we found the levels, we found the areas. We are looking for a potential breakup structure, so you can identify this. This is an order block. So the market could come back even here, could retest this level, could retest this level. Depending on how the market structure is forming, we are looking for possible entry in that market as soon as the price potentially break below here. Now, the same setup that if you guys looked at previous daily entry and previous days market movement that we have seen, we placed a couple of orders here yesterday in that area. We secured 2 trades here, and the market from that zone, you can see it form a double bottom and that started to trend again back to the upside, which is currently maintaining an uptrending market structure. This is an all-time high. We are looking at this market to come back to this key support level. I hope that you guys enjoying the live session that we are doing every day. If you are enjoying, make sure you like this stream and also subscribe to the channel. If you haven't done yet, press the notification bell so you are not missing any of the content that I am posting every day in this live session. Here's the support level, the market from this support. If you look at, this is a trend line and waiting for this break of that trend line. And that's where our next entry opportunity here in this market. Now, understanding trend line is very important. Welcome. Good morning. Thank you for confirmation. And as we are looking at this trend line here, and Now, what we are looking that in this market, as the market structure is changing every moment, we have to look for the trade from this key level. We have drawn the trend line on the lower time frame on 5 minutes on gold, and where if we look at in that area that you can see the market in that trend line, we could see the price to potentially to break out. What we need here is the market to potentially break from the trend line and then to return again back in the major direction of the trend. So some of the positions that we have opened, guys, this is where also I always emphasize on trading is freedom, right? As long as you know that exactly how to trade, otherwise it's gonna be a big source of losing trade. So you need to understand that in what situation to trade and what situation not to trade, and how to enter. Now, bigger win is the key. This is where everything that I do, if you look at, this is the last trade was closed, and I'm just quickly explaining to you guys so that you know that in what situation you can take this kind of bigger. This is 100 pip on a single trade. A couple of trades that we have opened. This is exactly was open using the same concept that we are discussing here. Nearly 200 pip on 5 minutes. Right? Doing a job is hard, right? You need 8 hours, 10 hours, 15 hours working. You need 5 minutes in trading. More than that. How this came, you know, there's a history behind it. It came from the Middle Age. If you look at from very Middle Age, we are told that if you want to live a life, you have to do struggle. You have to do it very, very hard work. Imagine that 1,000 or 2,000 years ago, how the society was, right? If you go back to 1200, right? There was two classes, elite and you can say the slave or those who work. Elite was in a city. There's only one or two group of people, or very few in comparison with, you can say that it's 99.9% was working hard as a labor. So that's where this came, that work hard and just to make a living. That's not true, right? You can work 5 minutes and can make more than what you can earn in a month. And that's what now in 2025, in 2026 here we are learning that how to make a month in just a matter of 5 minutes, right? 100 pip in gold can make a day, a week, a month for you. So if you look at this trade exactly was open with 100 pip move. Look at this one here, so that you can learn. This is where the main focus that we are looking at in this trade. I'm going to the 1 minute chart as the trade was open in 1 minute price action. And with this head and shoulder formation, head and shoulder, strong drop. That's the move that we have traded. Now, how can you identify that move? Look at this. First of all, a trend and then consolidation. So when you see that, keep in mind traders, this is a very important point. When you see a big long trend and then consolidation, when the consolidation become very longer in comparison with it should be, there's a chance for a deeper drop here. Because when the market changes trend, it never will do in one go. It's gonna consolidate, move in a sideways. This is called there is a phase here, accumulation and distribution. So once you see that the market has done that and then form that head and shoulder with a stronger rejection, that's the sign of drop here, and that's why you have entered this trade from that level, and boom, one single move the profit has taken. Now how can you catch this trade? Look at now, every situation is different. You could see that more often trade with the trend from the support and resistance. Sometimes you could see a complete, so you can see here, are you going to sell this market? The same kind of setup here. This is what I need to pay attention, that in what situation you will be trading with the trend, in what situation you can enter against the trend. You can see the same kind of price action is being formed on the lower time frame. The market is moving in a sideways, that means in a consolidation. That signals that this market potentially to break below, but we are not looking to enter here. Why? Because this is a healthy trend. Even the market break from here, from this trend line, you could see straight bounce back up. What is the difference between this consolidation and the one that we have opened? This consolidation. See the difference. In this consolidation, when the market moves, you can't find a smooth trend line. And if you look at the left, what do you see? There is a massive breakdown here. This is a resistance line. When the market consolidated, where there is already, the market has had a big drop. So when you look at the past, that means the left side, and when you see there is a bigger rejection, you could expect the market to have a rejection back again. Now with this trend line here that we have drawn on the lower time frame, we can see the market in that trend line, the price maintaining this trend line and moving in a sideways. So this structure, once it breaks below, is an opportunity to go long instead of short, because that breakdown that you could see could be a very smaller, right? Could be very small breakdown, and it's gonna be against the trend once we enter sell here. So our goal here is to wait for that structure to break. This is a bullish structure. How can you identify a structure is a bullish structure or bearish structure? How do you know that this consolidation is bullish or bearish? Now you can apply this in anything, anywhere, right? In any time frame, the same kind of structure. There is a normal rhythm in the market. There's rhythm in everywhere, right? You can see the rhythm. Rhythm is very important. As a trader also, you need to gain rhythm to become a better trader. How can you attain rhythm? If you dance, also you need a rhythm. The nature has a rhythm, right? So you can see that the season coming, winter, summer, and then spring, and one after one coming. It's a rhythm. Everything has a rhythm, right? The earth also revolving has a rhythm. Electron, neutron, the proton that makes up atom also has a rhythm in it. So the market has a natural rhythm that you can look at, and once you understand the rhythm, you know that when it's ready to buy or sell. So what is the rhythm of the market? Let's understand. The market always move like that. You'll find the foundational pattern same way. The market will create a move, okay, will create an impulse in any direction, either bullish or bearish. Once the market create that impulse, it's gonna consolidate or create a structure. That's the rhythm. Now this structure can be many form, can be a triangular pattern, can be a circular, semicircular pattern, can be bull flag, so bull flag that way, can be bear flag if it's a bear market, or you could see the market has created just a bullish channel and then breakout. So you need to identify that where is the pole of that consolidation. So look at this one here. This is the pole, right, on the lower time frame. and this is the consolidation. Are you getting my point? Very simple to understand, guys. This is nothing complex. Now, are you going to buy here? No, we need to look for the market to break from that structure. And more often you'll see that the price will break from that structure, grab liquidity, and then to trend back here in that direction that we are looking at. So a pole, a triangle, break from the structure, and then to trend. The simplest way to trade the market. Good morning. We'll drop to 417. Sir, please explain some more on order blocks. This is an order block where you see significant price movement either up or down. Okay, so order block is very important point as a trader that you need to look at, right? So if you look at a market, order block is the most important part if you are trading based on a smart money system. Are you a SMC trader or ICT trader? I would like to ask this question. How many of you here trade SMC, and do you have an idea or you need more explanation? Then we can look at that. Are you an SMT trader or an ICT trader? Welcome, SMC. Okay, so for those who are SMC trader, that means you trade based on smart money. You don't consider when the daily open or when the daily close, what session it is. SMC traders are universally can understand how the market structure works, right? And in fact, that is all you need. For the SMC trader, what you need is a pattern. Okay, so if you look at the now for those who are SMC trader, if you're a smart money trader, what you need to look at now for the smart money trader, if you look at here, you can see this is an order block and there is a fair value gap. So for the smart money trader, the first step is to look for the order block. Now you can see that this is an order block, and in that order block that you can see the market tested that order block and then reacted back to the upside here. Now this is an order block. What is an order block? The first question that you need to ask as an SMC trader, or if you are following the bigger trade, that means if you want to trade like a smart money, in fact this is the most effective way to trade the market. So order block, if you look at this will, it's like a mechanism of the market, how the market moves. Then you get a lot of answer of some of hidden question that probably coming in your mind if you look at how the order block works and how the smart money trade. And then you will know that in relation to the order block where the market is and why the market moves in a way it moves, right? This is a very important question that you need to ask every trader if you are trading either any gold, crypto, or currency pairs, or even any market. The same fundamental, the market movement. And if you look at the observation is always key. If you observe the market, what I'm saying, you'll see that exactly the same pattern always repeating over and over again. Now this is order block. So what is an order block? First of all, if you look at we are retail trader, right? So as a retail trader, we can trade any point, we can enter at any point. There's no problem, because you don't have any problem for liquidity. You can just place 5 lot, 10 lot, 20 lot, and straight away it's go to the market. Someone else on the other side will respond to it. But for the smart money, it's not easy, because they need to find liquidity. Why? Because every order that you will be placing in the market, on the other side, someone else need to take that order for you. So it can't be wait to take someone, right? So because the market will move. So that means if you want to buy something, someone else need to be willing to sell it to you. If you want to sell something, someone else on the other side need to be willing to buy from you. That is transaction that market is doing over and over again. And that is liquidity, because let's say you want to buy 500 lot, but at that moment in that price, because the price level is very important, because when you buy, the market goes up, when you sell, the market drops. So if you look at 4151 level, for example, here, and you want to buy at that price 500 lot, you most likely may not get liquidity, for example, for that much of big volume at that price. The price may go up and you might find liquidity, but in that case it's not profitable to you buy from such a higher price if you want to be a buyer. So the more liquidity you have, the more liquid the market is easy to enter, because someone else on the other side is ready to take your order. So what the smart money do there, this is where the best place to buy, and you can see there's a stronger breakout, right? And that's an order block. That's why this market has such a big impulse back to the upside. This is where the smart money bought, because after this breakdown they got liquidity. Why? Because this move that you can see, all those buyers who bought their stop loss here, and they turn into a seller. So the buyer's stop loss, you might think, okay, I'm a buyer, I'm not selling, but the buyer's stop loss is sell order in the market. And the buyer's stop loss is a sell order. That means when it is breaking below, actually you are buying again from those who are selling, because their stop loss is hit. And that's where the new liquidity has gathered and the market created its move back to the upside pullback. The market is maintaining this series of higher high and higher low, which is in an uptrending market. Now, whenever the market creating a new higher high, there is a pullback in it, and that pullback is in fact profit taking in the market. So if you look at here, you can see drop, profit taking, and also drop, profit taking. So the market, whenever breaking, it's taking profit, and whenever the market breaking from the previous swing low here, it's gathering that liquidity, and then bouncing off that level. That is what we can see in the market. So that being said, as whenever the market breaks, there's a new volume come in the market, new liquidity comes, and the smart money buys again, and the market moves in that area. So that's what we are looking at here. You can see it's now breaking up again. That means from this support, it wants to go back up. We'll be waiting for this breakup structure from that zone for any buying again in that market. And that's what we did. If you look at our previous trade, quite a few trades that we have opened in the past, and there's one here. Whenever the market, if you look at here, you can see this is a breakup structure trade with a triple top formation. The market has broken back below and it started to trend again in that direction. The market is now just breaking out of that resistance line where there is a high liquidity, if you look at, and as the price breaking out of that resistance, so you could see that continuation back above here in that market to create a potentially new higher high. And that's why you can see this is a consolidation here on the lower time frame, and from that consolidation the price slowly breaking out of that level, and you could see that the market to continue to trend back up here to create a new higher high in that market. Morning, sir. Are anticipating a further break upward during the London session. It's already, yes, the market is extremely bullish at the moment. So we see that it's currently in an all-time high, right? So it's approaching this 4200. Now there is a very high chance that the market will have a psychological rejection from this 4200, so it is not very far. Right now, the psychological rejection, it's very important to look at what is psychological rejection. So let's look at the past year. You guys will know that exactly what is psychological rejection here. Now, some of the levels, if you look at, in all the major levels that you can see, there is a psychological rejection. So if you look at here, you can see this is, though there is not big, but there is a psychological rejection from this 4,000 level. If you look at here, you can see this is 4,000 level, and from that level there is a psychological rejection. The market has broken below and then rejected back again. So every major level there is a psychological rejection. If you look at, and now it's approaching this 4200, right, which is another important psychological level. And in that area where there is a key resistance line 4200, that is where looking for the market to potentially to trend again. And this is where there is a psychological rejection. Now you can see the market breaking out of the structure. Now once the market managed to break above, getting rejected back again to this support level, that's where our entry criteria to look for bullish entry once the market managed to bounce off that level. Can't see it properly, so it's Xauusd gold that we are looking at for a potential entry. The market is now, again we see that it's on a breakout. The market is in trend that we can see again in that market where there is a bullish market structure, and in that bull market the price was maintaining this series of higher low, and in the series of higher low the price potentially to bounce off that level where potentially to reach 4200 and then return back again to this support level here in that market. welcome. So as the market structure, if we look at it, you can see it's maintaining this uptrending market structure. We could see the price to continue to rise back here to this resistance line, and the price is approaching that level where there is a high liquidity, and looking in that area from the lower time frame here from the support level, breaking above and expecting it to retest and then return again. And with that bounce of this level at the moment, it is currently maintaining that uptrend. What we look for is a retest of support and potentially here or even further below before we could look for an entry. If the market reach that psychological level, that means 4200, expecting a short-term rejection at least on the lower time frame. If you look at the 1 hour candle closing, to drop to that support level here on the lower time frame and then to return again back above here in that market. The market is potentially preparing for that potential rejection again and lower time frame price action from here. That this is currently in a bullish trend in that area, waiting for the market to show up for another upside bias here in that market. This is a key support level, expecting the market to potentially drop down here to this support and then to return again back up here to create a new higher high in that market. Look at the 1 hour chart and the 4 hour, which is still showing up to be significantly bullish. And from the daily that we have seen the market open once the market opened from this support level, it is showing up that the market potentially to remain upside here in that market. So looking at the lower time frame, if you look at the 5 minutes, the volume that we can see in this move is higher. So if the market reject back again for another retest, that's a good entry zone that you can look for upside. If you look at the bullish candle on the 5 minutes, you can see that all those candles are healthier, bigger bodies, so the volume is higher. We even don't need to look at the volume indicator. If you look at the timing as well as how the candlestick pattern form, you can see that it's a stronger bullish market. So breaking below is where we are looking for entry. We can align this trend line on the lower time frame along with this support for an upside bias here in that market. This is what I'm looking at for a possible entry opportunity in this market. Okay, we see that exactly the price reached that psychological level and getting that reaction back below as we discussed. Now that reaction, this is 5 minutes price action, and we have just seen that 1 hour candle close. We'd like to see that it's breaking below further for us to be able to enter a potential entry, and this is the level that I'm looking at to see the price to come back and retest that zone. We'll take a 1 minute break, coming back, and in the meantime guys, share your thought how you think the market gonna move today from that level. So you can see the market here. That's where there is a rejection on the lower time frame that you can see in this area. 30 minutes price action, which is significant rejection here in that market, where liquidity sweep and then rejection back above. If you guys look at, you can see lower time frame, there is a break of structure, and the market now, this is the psychological breakdown that we have seen from this higher price on this area. And from that psychological breakdown, the market has potentially moved back up from this support, which is pretty important breakout that you can see on the lower time frame. From this support level, there is a liquidity grab from this 10 EMA. The market has made its move back to the upside here in that area on gold. And at that level, if we look at the price action from this high, we could see the market to potentially deepen that drop. Okay, so which is a significant breakdown, and the price rejected back again. So looking at the 1 hour price action, let's look at the fresh perspective. There's a new candle open on the 1 hour so far, and this is the current level that we are looking for, possibly an entry coming up shortly in this market. So the current support level the market has tested. A breakout, long wick rejection, and this is 1 minute price action, and expecting to potentially come back here again now. 4194 could be an important level that you can look at now at the moment for an entry. So with this overextension back above, the market slowly trying to pull back to this long-term support level here in this market. We could see the market to drop down further to that level where there is a high area of value. Wanting to see the market to drop down here to that support, which is important level that looking to see the market to test and then to return again back above. lower time frame price action showing up to be potentially to retest again here. This is where the current support level they're looking at for the market to have another potential retest. And so the bulls are trying to push that price back here. Now looking at 15-minute chart again, which is key support level. And in that support, the market potentially to test and then to reject back again, that we are looking at in this market here. There is a bearish movement here that you can see in this market, expecting the price to potentially drop down further to this key support level here in that market. That is where the market slowly building that downside pressure here, and there's a 15-minute candle close with a doji. We see the price showing up to be here in that area, possibly to remain bullish, that you can see the market structure. So from that consolidation on the lower time frame, looking to see that break below before we look for a bullish entry. So the market structure here is currently in that area bullish, so you'll be looking into that entry from this key support level here in that market. I hope that you guys enjoying the live session. Make sure you like this stream and also subscribe to the channel if you haven't done yet. Press the notification bell so you are not missing any of the content that I'm posting every single day. Here is the lower time frame price action showing up that the market possibly to remain upside here from this support level. And looking at the 1 hour market structure from this support level, possibly to return again back above, and expecting a potential trend continuation pattern here in that market, where If you look at the lower time frame, you can see this is where the market structure has created a possibility for continuation back above. There's a less volatility, but we could see the current support level on the lower time frame is here. So in that current support level, looking at this market to test and then to return again back above. With the doji formation, you see there is a breakup structure. This is what I was looking to see. 15 minutes price action. It's a long wick doji here, and breaking below from that doji is where there is a high possibility price action that has formed on the lower time frame. You can see this is the now breakup structure here, which was looking to see that breaking below further, and probably we are looking to buy very soon, shortly after. 1 minute price action, pretty long weak candle here. We'll be looking to buy shortly here as the market breaking from the structure, giving a possibility for deeper pullback here. And 15 minutes price action is significantly, this is a bull market, and you can see the price potentially coming to weak fill, where there is a long wick, and you can see the market slowly coming for this deeper drop here, and you can see there's the price slowly. If you look at here, you can see there is a liquidity sweep. The market is actually showing up potentially to be upside here, so we will be opening buy for short term. This is currently breaking above, and we'll keeping the stop loss below this swing low here, scattering the rejection back above. There is a breakup structure, expecting the market to continue to bounce back here. So this is a short-term bullish entry for this possible move back up here in that market. It's now coming back below here, which is a zone that you would like to see the market tested. So this is a market order that I will be opening. So opening a bullish trade on gold. So I opened buy on gold, which is running currently, and so long on gold, we have open long on gold here, and this is currently bullish market. We're expecting the market to continue to rise back up to the major direction of the trend. The market trend is bullish, where the price up showing up to be upside here in that market. So you can see that it's a bull market, and would like to see that catching up here for another potential bounce. If we look at the 15 minutes, so you can see that it's showing up to be a remaining bullish here. This is a long-term bull market. 5-minute chart also showing up to be bullish. Back-to-back two important liquidity sweep here in that market. So looking to see that the market to remain upside here for certain period of time. So the reason I place the stop loss well below, the market might try to retest any of this support again, or you could see that rejection back above. So this is a buy trade with nearly very smaller stop loss, 34 pips stop loss only, because I keep always a very smaller stop loss in case the market not going up. I will be exiting the trade fastest way possible. But if the market going in our favor, as there is a break of structure, the possibility to go back up is also higher, and that's why we have opened, and we will be taking profit here with a faster move. If the price is bouncing off that level, you could see that potential rejection back here in that market. There's a long wick doji here, and that is the market is there's a liquidity sweep, expecting it to break out, and that is to say the price to bounce off that level, that waiting for the market to kick out and then to potentially to create a new higher high. This is an all-time high here. The price has just crossed that 4200, expecting a breakout here, guys. If the market break that up, we could see a significant move in one direction, and that's what you want to take that move. Currently we are running profit here, and would like to secure that trade for short-term perspective. It's a bull market, waiting for an entry here in that market. But there is a doji being formed on the 1-minute chart, and that might lead the market to have little move downside. If it is carrying the rejection here, which is, you could see the rejection could bring that market to bounce off that level. Now 15 minutes candle closing, there is another 15 minutes candle closing here, also the 30 minutes, which is doji, back to back two dojis here. So if we look at the 30 minutes also, you can see that there's another doji, Now with the 30 minutes candle close, expecting that the market to potentially have an explosion back to the upside for short term at least. And the bulls are pretty active here, that you can see there is another long wick candle being created. So it's long wick, and okay, so here is the long wick and expecting the market to explode back above here. Here you can see the market is currently showing up that we are on this trade here, and would like to see that it's maintaining this uptrending market structure. We're showing up to be bullish back to the upside here in that market. So currently at our entry, at my entry, depending on where you have entered, but showing up to be, we see that there is a visible inverted head and shoulder formation here, and with that visible inverted head and shoulder, expecting the market to cross up and then continue to trend here to create a new higher high in that market. Okay, so you see there is a bullish price action so far, and expecting it to remain in that direction here. Where the market structure showing up to be bullish to create a new higher high, which is showing that impulse back up, where so far 11 pip move that you can see in this market. Breaking out here, maintaining that uptrend, and we are on the trade. Bigger win is the key, as we mentioned, and we want to take this one as much as we can because it's a scalping trade, and we want to see that breaking above, right? So are you guys with me? Say yes in the live chat if you're running this trade with me. Which is currently upside breakout and expecting continuation of this uptrend. We are on this here and maintaining that bullish market structure in that area on gold, and we can see the price is maintaining that upside here and waiting for the price to show up back, and so far we are up on that and would like to hold it still for another move. And we do open more often live trade. You guys have seen that quite a few trades we have opened recently and that successfully closed, many of them. Now here is a move that would like to see that breaking out in the major direction of the trend. The market trend is bullish here, so 5-minute chart breaking out where the price action showing up to be upside here in that market. So there is a liquidity sweep here, and in that liquidity sweep expecting it to rebut again. 5 minutes candle, are you going to see that deeper pullback? So this is the 5 minutes price action, what expecting it to extend above here, but at the same time we are on this trade to there is a liquidity sweep again. And did not expected a break like that, but we'll be seeing that where it is heading to. Okay, getting rejection, which is good to see that straight back up. And okay, would like to see the new higher high, and if the market managed to create that new higher high here, which continue to rise back. We are on the profit zone again. When the market reach a key level, the price does this break up multiple times for its bigger move, which is called the liquidity grab. If you guys are not familiar with that, more discussion coming in this session as well as the later session, so don't miss out any part of the live session that we do to explain, to know more about the system that the market follows when we see the market is creating that structure. And here is 5 minutes doji in that area, which is pretty long wick doji here. Expecting it to cross that high, break that above, potentially to create a new higher high. Now it's on a consolidation. The reason the market is in a consolidation is because the price on a psychological level, as we discussed, so which potentially to break above. This is where we are at, still holding on to that trade for an upside move to create a new higher high. It's still premature to take profit, but if we see the market is not moving as expected, we might be taking the trade at we expected. Welcome. We are looking to see that breaking out. Yep, this is a new higher high, so which is sign that the market may potentially to remain upside here. And we are on this, we are up on this trade, expecting new higher high, 14 pip up, and would like to see a bigger move potentially to cross this new higher high. Which is showing up to be bullish. That is what we're looking at. And we are 19 pip up. We'll be looking to, come on, going up. This is what I'm telling you guys. 33 pip, 33, 35 pip. Boom, bounce, kick that profit target. Smashed it, guys. Smashed that profit target. Smashed it. Smashed it. Come on, this is what I was talking about. Did you guys witness this trade? 48 pip in front of you, in your own eyes. Did you enjoy this trade? Say yes if you enjoyed. This is what we trade live and we open live, right? I'm not talking about what we did, but I'm talking about what we have just done now. 2 trades straight hit profit target. Just now we have secured that one. Smashed it. Say smashed it in the live chat if you enjoyed that. Look at this trade. Just now we have secured 2 of them. One is opened by the system automatically. How many pip here? Smashed it. Look at this trade, the first one that you have opened, and the second one, the stop loss and all of that. The first trade that I have opened, how many people stop loss that you can see here? Let me bring that up fully. Open trade. Being very clear, right? See the first trade open, stop loss how many people? 4198.75 at entry, stop loss at 4197.32, less than 20 pip. It's only few pip stop loss in the market. Smash that above that level. This is how trading. This is how easy to trade. Join the Telegram right now to take you trading to the next level. If you haven't done yet, link below this video. There is a lot to take from here. Now we trade based on strategy, right? You guys have seen that. Did you like this stream? Say yes if you liked. And also, if you enjoyed this trade, make sure don't miss out any of this session that you're looking at. Do you think we can drop to 4 hour in the upcoming days? God bless you, sir. This is for this live session. Welcome. Great trade. Yes, absolutely. Nothing can be better than this, isn't it? This is what we do. Now, the most important part, as we mentioned, you guys see that how I was waiting for that entry. What was my trigger candle? Let's look at that. Let's look at the trigger candle that we have opened here. This is the trigger candle. Why did I choose that candlestick pattern? I detail every trade that I open here in this live session. Every detail, right? Are you using the trading view minds chart? So this is the trigger candle. Why did I look at that? This is where there is a massive amount of liquidity grab and the market has made its move back to the upside in that area. All right, so you can see the price is now showing up to be in that direction. All right, so now we see the market has made its all-time high and it's now ready for new movement. We will be refreshing the chart again. And with the refreshment of the chart again, we are looking for another trading opportunity very soon here. This is the first session. We do have another session coming up in few hours. If you guys excited to join that live session coming up in few hours at same time as invoice session that we do every single day. Don't miss out. Also join the Telegram. You can find link below this video for more updated education as well as analysis like that. Stay connected by joining the Telegram, and this is where you are looking at for another entry variation. That being said, thank you very much for joining this live session here. We'll see you again very soon. Get trading live together. Until that, stay well, stay happy. We'll see you there with new content as well as ideas in the next session.